Do you know how many people become millionaire every year in the world? You don't believe the number. Every year around 700,000 people become millionaires just in United States alone. It seems like becoming millionaire isn't that difficult like many of us are yet to believe. But as we all know, it's almost impossible to become one if we do not learn how to invest. Most people are interested in stock market, but problem that most people find is how to find good stocks and how to make profit from the stock market. People usually base their decision on the news. If stock price is rising and gets good attention, it must be a good investment and vice versa of course. But unfortunately, that is the worst way to invest. By the time it's already in the news, you're probably late and you're no longer recommended to invest in the stock. The world of stock market is complicated, so in this video, let's understand it as much as possible. Stock market is a place where all companies come together and trade their stocks, and a stock is just a piece of a company. So when you own a stock, you actually own a piece of company. Like in other business, if your business makes money, you will take the profit. But in this case, you just own a piece of company. So you only get a piece of the profit and that's called dividend. So the more stocks you earn, the more dividend you get paid, and that's the one way to earn money from the stock market. Businesses try to grow bigger and bigger. As they grow up, the value of a company grows as well and the price of the stock goes up. So if you buy an Apple stock for example for $20, then they release the new iPhone and it becomes successful and the stock price jumps to $30. That means you have made a profit of $10, and that's the second way to make money with the stocks, but that's also the way to lose the money if stock price goes down. It says to $15, then you're making a loss of $5. The stock market is little bit like gambling. You can make money if you make the right prediction, except that stocks can be predicted based on their performance. Every company behaves differently in the market. Let's consider a company like Coca-Cola whose worth is more than $70 billion and its stock is increasing from the past 30 years. Of course, it has ups and downs, but overall it's going up. So it's very unlikely that it will go down in the near future. However, when it's a technological company, it becomes more unpredictable because the technology is changing very fast. Let's take a look of two types of investors out there. The first type are active investors. Since stocks jump up and down every day, these type of investors predict which stocks go up today, so they buy them and sell them once they go up, usually on the same day or next. But for that, you need to be very well financially educated and spend every single day analyzing the stocks to make the right prediction, which is what a lot of people can't. That's why there is a second type of investors. They are known as long-term investors. They put their money in stocks and let it go for years. While you are investing, always diversify your investments. I mean to say, never put all your money in one company. Instead, invest them into many different companies. So, if in case one company goes down, you are not going to lose a lot of money. Also follow another rule of investment. Use the power of compounding. When Warren Buffett was asked, being a successful investor of all time, what is the secret of his success? He simply replied, my wellness came from the combination of living in America, the lucky genes, and the compound interest. Compound interest works if you don't withdraw your returns every year and invest them back. For example, let's say you are 20 years and you invest only $100 every month. By the time you're 45, it will almost go to $1 million. On the other side, if you would have saved that in a bank deposit, it would only be $54,000. Can you see the difference? That's the power of compound interest. Now imagine if you invest $500 every month, that will go to $5 million. Yes, so the key is to start as soon as possible. If you are in 20s and are watching my video, then start learning more and more about investing and start as quick as possible. Some of you might say, I don't want to wait 30 years until I make $1 million. Well, it's not necessary to hold your money that long. You can withdraw it any moment. But the longer you keep it, the more it will grow up. Stocks are way much complicated than what I have explained in this little short video. Financial analysis can give us a better image of how the company is performing. If you guys enjoyed this video, let me know by giving it a thumbs up and sharing it with your friends. Make sure to subscribe for interesting analysis of stock market and all other videos I post here. Thank you everyone. I'll see you in the next video.